As a listing agent, often we will decide to accept and not accept a loan based on what we get from the lender when we're reviewing offers. The other day I received a loan approval form. It was a piece of paper. Wasn't worth the paper it's written on. Oftentimes, though, I'll get a loan pre-approval with all kinds of details, credit scores, a Desktop Underwriter. What's the difference? What's the one that you want to help you get the house and get the best results? We're going to talk about that today. I'm Bill Gross at Bill Gross Probate, along with my colleague and good friend,
Patricia Castillo.
And with a real live lender with us today, our friend and colleague,
Shannon, the lender. How's it going, guys?
What is the difference between a loan pre-approval and a loan approval, and why do I care?
Yeah, that's a good question. So I think there's a loan pre-qualification, right, quote unquote. And now the literal term for pre-qualification is, any information that you give to a lender. Hey, I make this much. This is my credit score. This is my employment history. This is how much assets I have, et cetera, et cetera. Whatever you give them, either on an application or verbally, they take that and we say, okay, based off of what you're giving me, here's how much you're going to qualify for. Here's your rate, et cetera, and I can give you a pre-qualification letter. However, pre-qualification has no income documentation to back it up, no credit report to back it up, anything like that. It's pretty much just my opinion on how much you can qualify for based off of what you told me. So, when the pre-qualification, you might, and this is for people that are very hesitant too, to also even check their credit at all. They don't want any credit check. They just, hey, give me just an estimate of what I can get qualified for based off of what I'm going to tell you. And if you do that, hey, I could give you a letter stating that, hey, based off of what the person is telling me, this is how much they are qualified for, but there's no income documentation to back it up. Now, there's a pre-approval. Now, pre-approval is the real deal. Now, pre-approval, that's when, hey, as a lender, I've reviewed their pay stubs, I reviewed their taxes, their W-2s, I reviewed their credit report too, and I've done an actual credit report. Sometimes the pre-quals, you just do a soft pull. So, hey, this is how much I make, do a soft pull, or here's my credit karma, work with that. A pre-approval is, hey, I pulled this person's credit report. I've also reviewed their income documentation. I've reviewed their employment history. I've reviewed pretty much everything I could financially about this person or people. And here's my legitimate pre-approval. Now, also, here's a step up from just a pre-approval, which is what's called a Desktop Underwriter, DU. And if you know anything about conventional loans, FHA, conventional, the two biggest buyers are Fannie Mae and Freddie Mac. They have these automated systems that you pretty much upload the credit report and all the information that you know about the client. You upload that information to their automated system, and they spit out either an approval, denial, or deferred, meaning that, hey, there's something going on with this file that they internally in their systems, they pretty much can see things that maybe me as a loan officer cannot see, and they spit out an approval saying that, hey, based off of everything that you've given us, we either approve or won't approve this loan. Now, the good thing about a DU approval is that's a golden ticket with any bank that you go to. If I have a DU approval, that's pretty much almost like a guaranteed approval. Because anything, they're pretty much saying, whatever you've submitted, if this is true, we are approving this loan, no matter what. So the different layers, and I'll show you what this looks like. Pre-qualification, you'll have just probably a letter from a bank. Hey, this is a letter, they're approved based off of whatever they give me. Like Bill said, it's probably not worth the paper it's printed on, right? But it's just one letter saying that we think that they're approved based off of what they gave us. Pre-approval will have, hey, I vouch, I put my name on this. They're approved. Here's a copy of their credit report. I'll just give a one-pager of what the credit score is. And here's a copy of their proof of down payment. So, hey, not only are they approved, we have the credit report and we have the proof of their down payment to go along with it, so you know that they have the funds to close. Then what's even better than that is all that combined with the DU approval. They'll give me an actual report I submit that with the report, and that report shows the actual credit score. It'll show the debts, it'll show their income, it'll show any credit history that they have that's pertinent to that loan file, and it'll show any risk factors along with that loan. So it's pretty much almost everything you as a seller or an agent needs to know about that client. So, and I'll end with this, for buyers that want to know, hey, what's the difference and do I need it? I've gone down, hey, 1 is just an opinion, 2 is backed by income documentation, 3 is backed by an automated system from Fannie Mae and or Freddie Mac to say, hey, that they are approved. And I can tell you this, if you're just going with the pre-qualification, you're not that serious, hey, don't run my credit, just go based on my word, you're not going to get people taking you that seriously, because in those scenarios, I've given pre-qualification letters before, and when people try to go out and get offers, you don't know how many times I get the agents from the other end calling me, is this person serious? How well qualified are they? And it just puts me in a bind because you didn't let me look at your credit all the way. You didn't let me do a lot of things, see a lot of things. So I'm stuck in a pickle where I have to sell you, but at the same time, you haven't given me the ammo to do so. So I have to be very vague and say, hey, look, from what I've seen, everything looks good. Last time I, did an analysis on their credit report, everything seemed to be okay. I'm thinking, as opposed to if I have a pre-approval in the DU, that conversation is very different. Hey, they're well qualified. They have an 800 FICO score. They've been at this job for 3 years. They're in this industry, right? I know I can get this closed in X amount of days. These are the things that I'm looking into. I've already, even a step further from that, if I get a VOE, I've gotten a VOE already. So my confidence level when I have a pre-approval is night and day to a basic qualification. And it shows also to whoever you're putting an offer to, how serious you are as a buyer. Because, hey, did you do your homework? Did you give all your documentation? Did you complete your application? Did you give a credit? That's another benefit of getting your credit checked, because I know a lot of people are very scared of these inquiries. But if you're very serious about it, having your credit checked is just another way these agents who are reviewing your offers know, and owners know, that, hey, this person's serious. They're in it for a long haul. They've gotten their credit checked. They got a DU approval. You've given me updated bank statements, not bank statements in January. This is another common thing that I get. I don't know why people just love sending me old bank statements, but hey, everything's current and I have everything I need to pretty much sell you on this home. And 9 times out of 10, sometimes the pre-approval with the DU by itself will just be enough to where the seller will be like, you know what, we're gonna accept it. I very rarely do I get calls from agents when I have DU approval along with everything I need. It's usually when it's a half-assed pre-approval or pre-qualification. I didn't get a lot of information from the buyer, but they still want to look at houses. So it's like this in between where, now they're calling me saying, hey, what's going on, Sharon? Do you know this person?
Yeah, and I think what property is, when it's a hot property and the listing agents already know that they're going to be receiving multiple offers, the listing agent also does not want to waste their time with filtering through all the buyers that have their ducks in a row, that have the loan approval and a desktop underwriting form all ready to go. So many times the listing agents will put a condition in the MLS, letting in the private remarks that only us realtors can see, that will say the buyers are required to get pre-qualified with the listing agent's lender, right? So there has to be a cross qualification done there. And I've done that before when I've sold pre-foreclosure homes where we're working with a tight timeline. And I want to make sure that the buyers that are submitting offers on my listings are not going to fall out. They have been already pre-approved. They have been verified as far as their employment, their taxes, income documentation, pay stubs. I mean, I don't want any surprises at the end to come up when we're working on a tight timeline for closing. And so I have experienced before buyers getting an offer with a pre-qualification. I talk to the lender and they say, well, we never got the tax returns. We didn't actually verify all of the information. We gave the buyer a pre-qualification based off of the information they provided us, right? So a lot of times buyers are looking at maybe Credit Karma. They signed up with Credit Karma on an app on the phone. And so they feel like this is my credit score, right? And so they're
Yeah.
going off of what Credit Karma is telling them, rather than what Experian is going to pull, TransUnion, and Equifax. So those are the three credit bureau agencies that are going to be giving you your accurate credit score that is going to apply towards your financing, not Credit Karma, right? So I've had that happen in the past where I've told the buyer's agent, you know, your buyer needs to get all of their documents in and get everything checked as far as their credit and their income, because we can't even really review your offer right now. You guys aren't even ready to go. So this happens, I think, also with a lot of newer agents that are in the business. They just got their real estate license. They don't really know yet how to vet the buyer. And so they get excited. They have a client and they're wanting to get a client into escrow, and they go off the pre-qualification and submit the offer, right? So it's a learning process for them, and sometimes a painful one for the buyer because they're not ready. And most likely they're not going to get selected because there's other buyers that are ready to go. They do have loan approval and they do have a DU also. And so those are the serious buyers that are ready and they're prepared and they've been educated properly by their real estate agent.
I literally had an escrow last week. We had a couple offers. One was higher, but I received kind of a letter from a lender saying they were qualified. And I called the lender and asked a few questions. They said, well, I don't really have everything from my buyer yet. And, you know, we were going to go with a slightly lower price because that buyer had a DU and it had their proof of funds and everything was ready to go. And the other agent was like, well, can you give me more time? I said, well, yeah, but your buyer's got to comply. And so then I got proof of funds when they weren't the right name, they weren't matched right. The first time I got it was retirement funds, which can't be used. In this case, it was CalSTRS money, which is your money, but you can't withdraw from it except for in certain circumstances. And then we finally got the DU, but the DU in this case had the assets, but the proof of funds, they didn't have enough money to show the funds were correct. So what happens is the lender asked, well, how much do you have in the bank? They said, $100,000. You put that money in, and DU says, oh, well, if you have $100,000, your loan's approved. But the $100,000 was in their CalSTRS account. And so it's one of those things where it's disappointing for the buyer. I'm listening to the agent kind of crying on the phone. I feel bad for him. But the reality is the buyer never did what the lender told him to do. Then you don't get the house. And I think as a listing agent, my job is to protect my client from getting an escrow with a buyer who's going to back out. In fact, we literally had an escrow where I think the buyer he never gave the right information, and he got tired of being asked while he was in escrow, and he backed out. And it cost my seller a lot of money and time and cost me reputation, and we can't let that happen. So I don't think buyers appreciate that this is a business, and there's business procedures we go through like any other business. I don't think it's too cumbersome. I think it's a lot easier than people imagine it to be if you really were to think about it. But for somebody who's never bought a house before, it seems overwhelming. But that's why the preparation is so important. And I would say this, if you want to buy a house, one of your competitive advantages can be a proper pre-approval with a great mortgage originator, with a great DU and everything matched up. Now you're presenting a stronger offer that the listing agent can consider properly rather than hoping, because hope isn't a strategy, that the incomplete one's going to come through.
Right.
Yeah.
Being ready is something that buyers, I think, in the beginning, they don't want to have their credit pulled because they feel like it's going to really reduce their FICO score. But if you are looking to buy a home and you're starting to shop for homes, at that point, you want to get your full loan approval.
I think you have to. I mean, that's changed over time. It used to be every subsequent pull affected your credit. And I think nowadays it's within 30 days, within 90 days, the inquiries don't change your credit score past one. But either way, if you want to buy a house, you got to play the game. And I understand the reticence to do it, but that's the price of presenting. And the truth is, if your credit score is so shaky that one more inquiry is going to make a difference, then something's wrong. Like
Bill, you hit it right on the nail. Is if your credit score is already shaky, that's my and even if, because it's funny you say that, and it just struck a nerve with me, because it's either people that have very low FICO scores that are concerned, or people that have like 850 FICO scores, and they're just like, oh, if you check it, it's going to go down to 820, right?
Right.
Because in their brain, they have a condition to believe. with all these consumer products, they've been trained to believe that that's important. They're not, and the truth is you can pay off a credit card balance before your statement closes, and that's going to raise your credit score by more than the inquiry would offset it. You have the extra money, for example, my wife, shops at Target. You have a card with Target gives you 5% off your purchases. And it might have $500 on there. Well, if we pay the $500 before the statement date, so when Target reports it, rather than a statement of $500 and I pay it in full, if I pay before that date and it shows statement 0, that raises my credit score by more than the inquiry. Now, you have to have the $500 to do that, right? Well, if you don't and your credit's that tight, maybe you shouldn't be buying a house right now. Like that shouldn't be the deciding factor, because if you can't compete properly, you're going to end up, not getting the best deal.
That's right.
Yeah. And also too, this also shows your team how serious you are. Like as a loan officer, if you're like, hey, you know what? I don't want to provide the documentation. I don't want to provide your taxes. I don't want to run my credit rent. I just want some ballpark numbers. Great. It tells me that you're not serious, and then, if I have 2 pre-quals the same day, someone's like, hey, pull my credit. Here's all my documentation. Here's this. And then I have someone else who's not giving me everything. Who do you think I'm going to work on first? Is the person that's, hey, I'm serious. I'm ready to go. So it's even telling your own team how serious you are or how not. Because I can tell you this, regardless of wherever your credit's at, even if your credit score is not that good, in order to fix it, we have to check it, right? In order for me to, see, hey, if I can do a rapid rescore, do I need this? Even if I need to do that, I need to still check it. And so that's another thing is, how am I going to fix what I can't see, right?
I think it's a cultural thing that somehow somebody started telling people that you can make money and it's easy. You can buy real estate and it's easy. It's not easy. There's work involved. Patricia and I were chuckling last week, and I get this all the time. I get agents who will text me about listing and say, is the seller flexible on the price? Well, I don't know. I guess it depends. I mean, paying them gold bullion, maybe. If you're going to be a pain to the whole transaction, no. And then I'll say, have you seen the property? Well, no. Before I showed them the property, he was real flexible. Well, so you're not even looking at the property, even if we're overpriced by 10%. You want to see all the comparables so you understand the market and the pricing. These are the same buyers who don't want to complete a pre-approval. Like they want everybody to be ready for them and run a relay race when they're ready to buy. And that's not how real estate works in 2026, certainly not in Los Angeles today. That it's more of a slight seller's market, but even in a normal market, nobody's going to sell you a house just because you're a good person. They're going to sell you a house because you can prove you're a good person and that you're able and motivated to close on that transaction. So again, to me, this is just how we do little things is how we do everything. And I think if you want to buy a property, find a great originator. Shannon's one of them. Find a great buyer's agent. Patricia's one of them. And get a plan and work the plan together. And if you can't do that, you're probably running with the minor leaguers, and that's going to get you minor league results.
That's right. I was also looking at, communication is also a big piece of this whole scenario that we're talking about. And I was looking at this Zillow housing trend report about buyers and their behavior lately. So it said 53% of buyers prefer to have communication. Their communication method is by text or email. I think email is great, but text messaging about, putting together an offer, terms, things like that, it's always better to have. I feel like it's always better to have a conversation about that so that you can explain the nuances between terms that you're talking about, contingencies, pricing, things like that. I wouldn't feel comfortable sending all that over a text message. But that's what the report showed was that 53% of today's buyers prefer text messaging for communication.
I'd be careful of that because Zillow, just for example, claims they have more buyers than sales in America by 20 times. Like they have 80 or 90 million people on the website, and we're only selling 5 million houses a year. So it's about 20 times, 18 times more. So 17 of 18 Zillow buyers are really just Zillow clickers who are never going to buy a house. And that's why when people who advertise with Zillow, they have to have a whole process to weed through people. That's why none of the agents want to talk to those people. They all want to use, chat robots. And so what Zillow's doing is kind of priming the pump for their lazy real estate agents who buy their leads to say, you don't need to talk to somebody, just set up a really good chat bot, and you can be as effective as a human being. Mm-hmm. And the answer is we all appreciate good service when we call for help on a service line. We all appreciate a human that speaks our language and understands us versus a chatbot. Nobody likes these phone trees with questions. We've all gotten trapped around and, type in 1 for this, 2 for that. Right. And your answer, well, my answer is 3. Where's 3?
Where's the live person?
I think one about Zillow is they really advertise as truth what they want the market to be. And I wouldn't fall for it. I do not believe the people who really want to make the most important financial decision of their life, or at least that decade, really prefer to communicate via text. That's not my experience. My experience is always complicated things like this. They'd love to talk to me. That's why they choose me. And if Zillow could sell a house without us, they would do it. They're not. They're selling their leads to realtors. I think we're dumb enough to pay for it. They're overpriced fees. And I like Zillow as a listing agent because they help market my listings to all these buyers and to all these realtors. Good. If you want to use that, that's fine. But I'd be very careful about following Zillow's advice because they're not serving customers. They're selling leads to real estate agents who are weak enough, who have to buy leads and can't develop referrals and can't get customers to come to them without paying for it. Mm-hmm. That's my soapbox on Zillow. I hate Zillow.com as my website, by the way.
I have had clients text me about certain things that I feel are really important, but then I say, let's have a conversation about it because people get busy. They're at work, they're in a meeting. Sometimes they're even in front of family and they don't want to talk about their personal business in front of family. So they're texting and I say, call me when you're free, when you're available, when you have some privacy so we can talk about it. But yes, very important to discuss details verbally.
I think so. And us also, when there's tough decision made, I think, and this is why I wear earphones because, I have my own office. I can close the door, pretty much as quiet. But I really want to hear the subtlety. I want to hear the tone. I want to hear how they say it to me. That doesn't come across as clearly in a text. Yeah, people have emojis. Okay, whatever. But, when you talk about how badly do you want this house? Like, is this really important to you? And we've looked at 10 other houses. If this one gets away, are you okay with that? I don't just want them to text me, yeah, I'm fine, or no, I'm not. I want to hear in their voice that which they can't express in the text. That makes a difference. As a seller, same thing. Do you want to come down $10,000? I know it hurts, but at the same time, we can be in escrow. I want to hear the response, not just the words yes or no, but I think as humans, we have the advantage to also go a little deeper with people.
Absolutely.
Okay. I hate Zillow.com. I can't get that website. Somebody else owns it. So I'm going to work on another one. Did I say that out loud? I really shouldn't talk bad about competitors like that, I guess. Okay. I'm sorry.
All righty. Well, let's wrap it up. So
if you love Zillow, sorry, not sorry. If you hate Zillow like me and want to talk to a professional real estate agent, Patricia Castillo's one. Patricia, what are you doing this weekend? How can people reach you if they want to get together and buy a house or sell a house?
My cell number is the best way, 323-365-9909.
Don't use the lenders that Zillow charges to be on the website or gets referral fee for referring to their bad service to cover up for the bad habits. Pick a great originator. One we have is Shannon, the lender. Shannon, how can we get a hold of you?
Thanks, Ed. Yeah, my Instagram, if you need fun with Shannon, or you can reach out to me, 661-317-8484.
Fantastic. I'm Bill Gross at Bill Gross Probate on social media. We'd love to get your feedback on this. Please give us a like, schedule it, send us a response, text me, email me, or Patricia or Shannon. Love to hear your input. As always, make today your best day ever. Thanks, everybody.
Bye.